Hello everyone, humble traders here. Welcome back to the channel. I'm back to tell you a little about an update about gold. Gold has been trading upwards, and using the SIWA strategy, we have been engaging gold, we have been buying gold, but suddenly we noticed something we already spoke about in the past video. I will also link the video below so you can see exactly our areas of interest. We noticed a high that was created by gold some time back, and then we said we were anticipating an upper move to that high, and if the high is being taken out, then maybe gold will attempt to reach out to the higher high before returning back down, because there is some unfinished business down that gold may be wanting to reach out to before the impulsive leg resumes. When I say impulse, I'm referring to another type of strategy which is called the Elliott wave, which we are not actually teaching on this channel. So I'm just going to stick to the SIWA strategy so that you can be able to see how powerful we were able to predict this move. And when I go on to the charts, and we were able to call that move even in Bitcoin, and we said it in the other video. But in this video, I'm just going to quickly go on to the charts and try to show you everything that has been happening in gold, and then how we capitalize on that move and what we are waiting for before we also hop back on the trade, okay, so that we can continue trading upwards. And like I said, if this movement down is sustained, then it means we may be targeting the relative equal lows down. I will show you that also on the chart. I'm just giving a brief here. So stay with us, and if you have any questions, please don't hesitate to drop it at the comment section so that we can also address it. Please, any question at all is welcome. Don't bother. If you don't feel like asking question, no problem. Maybe just stay with us, and gradually you will get a grip, or you will catch the concept that we have been trying to preach on this channel. Let us quickly go without much ado to the chart so that I can show you everything gold has been doing. Let's go there, guys. So here we are. This is a chart of gold, and remember last week we were saying that we had this high, this very high in view. We were targeting that high. If price takes out this high, then it should be reaching out to maybe this other high before the final move down, and we are anticipating that move down, but structure is always supposed to be followed carefully, and that's why we've been like studying gold all this time so that we can catch everything about gold concerning its structure. So as you can see here, immediately market opened this week, we took out this high. That means the first objective has been achieved. The next thing is that, because this is a daily high, you can see this is a daily chart. Anytime a high is broken or a low is broken, that calls for a reaction, and that's the reaction we are seeing right now. Price has to retrace back down in response to that break of the structure that happened, so that it will prepare itself for a another move. Let me put it that way. And this move may be to target this high next before we see a final move down. But in case gold wants to and in case gold just wants to retrace back down from here, then it means gold may be targeting this low here. Anyway, I'm not very comfortable about what's happening right now concerning the lower trajectory. I'm just going to keep watching to see, maybe there is still a remaining up move before the uh, downward move takes its own course. But for now, we are just going to continue monitoring this move. Let's take this chart to the lower time frame so you can see clearly what is happening. And in trying to target this move using our SIWA strategy, like I said, you wait for an exhaustion. If you notice, uh, the trend was poised to go up, and it tried to uh, follow the move until this retracement or pullback began. And so the next thing we should do is to wait for this pullback. That's the number one rule of SIWA to identify exhaustion, right? So this is an exhaustion, and we just have to wait for it to reach out to wherever it wants to go. Then we can use the 9 period EMA to engage this move and return back up. But as it is going back down, I said along the way I developed another strategy which I call this the EMA cascading. I can use that to target the extent of this retracement, and so I'll be looking for the price to come below the 200 EMA on any lower time frame. For shallow pullbacks, usually the 1 minute is sufficient, but as you can see, this was a move that happened on the daily time frame. For that reason, the pullback itself could be deeper, and that's why we are seeing this move. Now currently we are below the 200 EMA on 15 minutes. Okay, and that's to show you that 15 minutes could be our or it could be the time frame we need to pay attention to, so that we can catch the extent of that retracement. 15 minutes or even 30 minutes. Let's check the 30 minutes. Okay, I can see now on the 30 minutes there is a fresh break of the 200 EMA. So this whole move could actually be reaching out to a lower objective. Let me even open a sell here, Bismillah, so that we can keep monitoring this move together as we try to go back. Remember, we are trading only gold in this account. So we are going to target this move because I'm seeing the 30 minutes as something that price may want to reach out to where? To its 88.6 level. Let me place a Fibonacci on that so that we may target the extent of the move from the low to the high. So that's the low. I'm targeting that from that low to that high. Anywhere we see 88.6, that's going to be our area of interest, or slightly above that. Okay, slightly above that. So let's see. This 15 minutes is not giving us the view we want. Let's go 30 minutes. 30 minutes looks more feasible because the move came from a higher time frame. That retracement came off of a higher time frame, that's the daily time frame, because that daily swing high was broken, and it calls for this kind of move. So anytime you're trading and a major structure is broken on a higher time frame, run or stay out of that scenario, especially if you didn't enter low, and especially if you are in a counter trend and you expect that maybe that move could move firstly against you and end up even taking you out of the trade. So for us, we are still bullish gold, but we are in a pullback, and that pullback we expect it to come into this region here. Okay, and we are targeting the, let's target 50% first. I'm looking at that 50% level first. I may get off there and then uh get in again to see if I can reach the either the 61.8 level or the, let's go 1 hour so we can see the levels very well. As you can see from here, I expect this move to come to around the 88.6 level before any uptrend resumes. But if we can get to that 88.6 level, are we not almost close to the relative equal high that we are targeting? Well, it's left to be seen. Ours is to follow our strategy, and that strategy says we are in a pullback and we can wait for it to finish so that we can buy gold back up. I actually have been testing out this move using my real account, and I've been losing some cent like that. As you can see from here, let me show you a screenshot. Okay, I've been trying to follow, and then until I saw the structure was clear, then I thought, no, stay out of this move because this move is not ready yet. And then I saw what my EMAs were trying to tell me. It was targeting somewhere below the 30, somewhere there's a region that is visible on the 1 hour and also on the 30. In fact, better on the 30 minutes chart, because that's when you see price clearly coming below the 200 EMA. So as you are following us on this channel, you'll be learning different things. You'll be learning the EMA SIWA, the EMA, the SIWA trading system, which consists of the use of the 9 period EMA, 21 period EMA, the 40 or 50 EMA, and then the 200 EMA. And on the lower compartment of your screen, you could just throw the MACD indicator or the volume and the volume indicator. It's either the MACD and volume indicator or OBV and MFI indicator. I leave that to you to see which pair works best for you, but for now I'm using the MACD and volume indicator, and also the ATR indicator, because I sometimes use the ATR to place my stops so that I will be able to protect my equity. So as you can see, we are dropping below the 30 minutes gray indicator, which is the 200 EM. As you can see, we are almost at the 50% level. Once we are there, I will close that trade and then monitor what price, because sometimes when price hits the 50%, it still goes back up to prepare to fall more. So I will just close my trade somewhere around there and then monitor what happens, or completely stay out of this trade. Since this is not my trade, actually this is not my trade. My trade is to follow that move back up to target that high that is left unbroken on the daily chart. So I will stop here. This is just an update to tell you that this strategy is too powerful, that when you are here with us, like I was saying, you will learn the EMA, the SIWA strategy itself. That is the foundational SIWA strategy. And you will also learn what we call the EMA cascading, which will help you to target entries, especially when you had missed some part of the move. And then you will also be learning the secret candle. That secret candle is what you have been using to follow the movement in gold, which we said we were targeting those highs, and then later we are targeting this low before the final move up. I see this the current up move in gold to be a stop hunt, and so I still maintain it's a stop hunt until I'm proven wrong. So I will continue to follow the move and then report to you. By God's grace, just stay with us in the channel. If you like what we are bringing to you, uh, do not hesitate to drop a like. If you have friends, you can share the channel with them so that they can watch our videos and also participate in being part of our family. And I promise you, if you pay attention and you work hard, within 1 month you would have started seeing some things on your dashboard, especially when you use the demo account to test out the strategy yourself. And I'll also at this point uh, post a disclaimer to say that this is no financial advice at all, but this is something that invites you to self-development, so you can begin to think about other ways of making extra income for yourself. So you are the one responsible for your own trades. Whatever you do, it is your money, it is your charts, it is everything. You are the boss there. So ours is to tell you what we are seeing in the market. So thank you so much, and then until we see in the next one, I wish you all happy trading.